Hi there, Caesar with EliteFinancialCredit.com, and today I want to talk to you a little bit about different types of services that you'll see available to consumers and the differences in certain services. And those services we'll cover are debt consolidation, debt settlement, consumer credit counseling, credit repair, and bankruptcy. Now, let me start off by telling you that it may not be obvious, but I'm not an attorney. So I'm not giving you legal advice, just some information based on the experiences that I've shared in life and in business. And so let's cover some of the differences here. And the first thing we'll cover is debt consolidation. And what does debt consolidation mean? And when you'll see some marketing, and a lot of this you're going to find is the type of marketing that you're looking at, whether it's online or in print, and you'll see something called debt consolidation. And really what that means is it's a loan, and you're really transferring balances from, say, a higher interest credit card or a higher balance credit card. And traditionally, you're going to be placing that into a loan, and that loan's going to have a smaller interest rate, which you'll maybe combining several sources of different credit cards or different sources of payments that you have, placing them into one loan and then paying that one loan off eventually. That's helpful for people that have several things going on, what they're trying to maintain and keep their sanity and paying things off. It helps with interest rates and lowering that and the amount you're paying out. But it does require you to have a good enough credit score to obtain the loan itself. Next, let me stop there. I'm going to also give you kind of the time frames or maybe costs involved with each one. With debt consolidation, it's like any loan. There's going to be some sort of fee involved with that, and the time process on that can probably take me anywhere from 1 to 2 weeks to actually get the loan. How it reflects on a credit report is a different story, but it can be helpful for a credit report as well because you will be taking down some of your higher balance accounts. Next, we'll talk about debt settlement and what that means. Debt settlement means that traditionally you're going to have an account that has a balance on it, and you're struggling to pay that back, and so you're looking for some help. And what these types of debt settlement companies do is they collect their fee to help settle out your debt. Generally, you're not going to be able to settle out your debt unless it's in some sort of default mode, whether you're 60, 90, 120 days late, or most likely in a charge-off status. Once it reaches 180 days late, that's when you'll probably get the best settlement. And so these companies will come around and they will settle your debt. You pay X amount of dollars, maybe it's 30%, maybe it's 50% of what the accrued balance is. And these companies will collect their fee first, and then they will settle out your bill next. That can be costly and time-consuming because you're going to have to pay that company's fee before you actually pay your debt. And they may even be collecting your monthly payments and saving it aside into an escrow account, or maybe they're actually using your money, which they shouldn't be. But that can take anywhere from a few months up to a year to several years, depending on your cash flow. If you don't have the money to settle your debt, debt settlement is not a good option for you. Let's talk about credit counseling. So when you hear credit counseling, what does that mean? This is a company that will help to lower your interest rates on your credit cards. This is meant for somebody who's struggling, who you're really looking for options, whether that's you're drowning in debt, you've lost some income, and you're not able to pay your minimum monthly dues out each month. What's going to happen is it really crashes your credit scores, but it's an option for you. They will close the account, lower your monthly amount because you're going to be basically zeroing out your APR or getting it down a lot lower, and you're going to be making minimum monthly payments even on the minimum. So if maybe your monthly payment was at $35 a month, you might be paying $5 a month to that account until it's paid off. And because of that, this can take a very long time, and there is a small fee to that as well. So this can take anywhere from, probably 6 months up to 5 years, depending on how much debt you have and how much you're able to pay back and still maintain and pay off your other bills. The next source we'll talk about is credit repair. That can come in many different names depending on the marketing that you're looking at. Some people call it credit restoration, like a credit blast or a freeze. They do things that they label with marketing like a Section 609 dispute or trade line or credit wipe. A lot of these can lean right into being illegal or fraudulent activities, so you got to be careful with what they're claiming they're able to do. Some people say we've got a 30-day credit swipe where they're filing, fraudulent charges and getting police reports involved, and so it can be some very shady lane and shady people dealing with that. So be careful with that. For the most part, what credit repair is using current laws or legislations to dispute information that may be in error, it may be outdated, it may be unverifiable. In addition to disputing information with credit bureaus, banks, creditors, collection agencies, people of that nature, they're also going to show you how to add credit. And there are ways to add credit that are going to be beneficial for you while still being legal. This can take anywhere from 30 days up to a year. Traditionally, most people will be somewhere between 3 and 9 months in a program, and they'll be able to get their scores higher to obtain some sort of financing. That's traditionally what it's used for. The final category is a Chapter 7 bankruptcy, and this is where you're going to be going through an attorney, hopefully, and filing for bankruptcy protection. It's called protection for a reason, and it's there to help you on a last case resort. Dissolving your current unsecured debt, so meaning you won't have to pay it back. This process can take generally about 4 months, sometimes longer, depending on the court and your specific case. But you need to talk to a bankruptcy attorney but if you're thinking of going down that route. So the gist of all of this is, keeping your positive accounts positive, keeping your negative accounts off of your credit report if you can, or challenging negative information, and time. Time is the great equalizer. We're all issued the same amount of it. Use it to your benefit. Well, there it is. If you have any questions, please give us a call, send us an email, message us on Facebook. My name is Caesar with EliteFinancialCredit.com, and I hope you enjoyed this video. Thank you.